Hello everyone, welcome to CryptoPi. In today's video, I want to talk about my outlook for Bitcoin for the year 2026. A short recap of what happened in 2025 from the analyst's point of view, from various experts in social media and various top indicators. So what I have right now, what I have switched on the indicators is the 200-week moving average on the CryptoPi trend indicator and the 50-week moving average. And right now I'm on the weekly time frame. Before we continue with the technical analysis, I want to share something which has been in my mind about following various social media channels, and quite popular ones in the crypto world. The euphoria was already there created by those channels without really analyzing the charts from various perspectives, and that created an impression, or some of them also claimed that by end of 2025 Bitcoin price would let's say reach to 500,000, so something around here. If we have to just draw a line, something around this point, that's maybe 2,000 bit more, yeah, something over here. And that was, and this price was, let's say, from the top almost 300, approximately 300% more, claiming that Bitcoin will reach 500,000 by end of 2025 just didn't fit to my analysis. But no matter how you do it, and for them, their analysis was that we have seen this kind of parabolic moves by Bitcoin in the past, and if the parabolic moves are going to be there, like this one, or if they were there in the past, then it's quite likely that we will also have a parabolic move this cycle or the last cycle, however one wants to put it. The problem with parabolic moves was that with this kind of thesis was that the accumulation phase of Bitcoin was not considered in that analysis. And additionally, the idea of diminishing returns, which has been floated around since quite some time, and these two aspects were not considered. What do I mean by accumulation period? So let me first show some plots which we discussed in some of the last videos. So the first one was, let's say, the distribution lines, and then we'll talk about accumulation and halving lines. So halving basically is quite well defined. It is approximately in the same week or on the same day when Bitcoin rewards are reduced to half what was given to people or the companies who mine Bitcoins. And based on these halving lines, we can create the distribution lines, which are the green ones, the red ones, and the accumulation lines, which are the green ones. So the accumulation lines, let's hide them right now. And for the distribution lines, I usually ignore the first one. I exclude them because it was too early, the market was not developed. But let's consider from this point onwards, from 2014. And we discussed this in the video which was released in October, that once the price has crossed the distribution line, it is a pretty good probability that Bitcoin is not going to turn back up to its previously created all-time high. So here in 2013 we got the high of the cycle. Then price crossed the distribution line in March, and then we saw the bear market continuing. Same thing happened in December 2017, the last cycle, November 2021, or the cycle before the last one, if you accept this theory or the model where Bitcoin price has crossed the distribution line in the week of 20th October, then we are already in the bear market. There is of course a possibility that price might go like this way, like this, or there is other possibility of price not doing any of that, but price going up this and shooting up. This is also a possibility. I mean, it's a market, so no one knows for sure what Bitcoin will do next week or next month. But given the historical data and the 4-year cycle pattern, it was quite good to get out of the market as soon as we learn that the market is in overbought region very close to the distribution line. So if one would have, let's say, got out of the market here or here or even here, it would have been fairly a decent profit. Obviously it depends upon when one would have taken the entry for the long position. But after price crossed the distribution line in October 2025, to me it made no sense to still hold Bitcoin given that 4-year cycle is in play. Now, what did I mean by the accumulation period? So why did we not see the parabolic rally as per the most experts and channels with a couple of 100,000 followers or in some cases 1 million followers? So why did you not see a parabolic move like previous years? To me, the first thing is, how long was the accumulation period? Let's switch on. Let's view the accumulation lines. So whenever the Bitcoin price crosses the green line, that's when I define it that accumulation period of Bitcoin has begun. Now, in this case of the year 2015, accumulation period was for approximately 210 days. 210, yeah, so 30 bars, 210 days. In the year of 2018, the accumulation period went up until 20 bars, and for here it was just 12 bars, so 84 days. That's less than 3 months. Think of it like a spring. If you press the spring all the way till the bottom, and when you release it, it jumps much higher. And that is basically accumulating energy to make a huge jump. In cycle 3, or not cycle 3, but in this particular cycle over here, there was literally hardly any time for people to get in. People here includes companies, funds, or whatnot. And to me, these were two main reasons why we would not see a parabolic move. I mean, if one wants to think, it is still the slope of this line is not bad. If you consider from here up until this point, the slope is quite well defined. If I can find the angle, the thing to compute angle, that would be quite nice. Yeah, let's see, trend angle. That's not bad. I mean, let's see from here. All right, it didn't go 74, but this is still 36. I mean, this is a silly technical analysis. I would not put a lot of thought in it. But if I have to look at the gains, how much gains were made after, let's say, one bought as soon as the accumulation period began, right? So from here, and sold as soon as the distribution phase began. That's already 432%, 34% profit. Now, few other indicators, few other points to mention here. There was one model which said that whenever the 200-week moving average crosses the price, the all-time high of the previous cycle, that's when usually the top is. Well, that model worked for 2013. Well, for 2013, not really, but we used. Oh, all right, yeah, it did work for 2013 if you consider this as a cycle, but it did work for 2017, and it partially worked for 2022. Why do I say partially? Because after this point, after this high, the price had already crossed the distribution line. But let's ignore the distribution lines for the moment. Let's say that one only defines the high when the 200-week moving average crosses the all-time high. So then this would be the candle where one would say the all-time high is crossed. For this ongoing cycle, let's say as per this model, it's still an ongoing cycle. These are the two ways which we discussed previously. Either the 200-week moving average goes parabolic or increases, starts increasing towards all-time high, or it just keeps going at its pace, and it takes its time to reach the previous all-time high, which is over here. So none of this has happened until now. So it did not cross, it did not go parabolic because the price did not go parabolic. The price did not go parabolic because the accumulation phase was way too low. And if if someone is following this model and are still in hopes that 200-week moving average will suddenly start going up, we can see that what would happen. Let's go back to 100 bars. That's coming to here. Yeah, so it could briefly go up, but after, let's say, few weeks, so if let's say after from here, it could go for 6 weeks, actually 5 weeks, so 1 month. Perhaps we see a rally in January, a short rally of the 200-week moving average. Of course, it also depends upon how Bitcoin's price is moving at the moment. If Bitcoin's price goes up, then considering the average from 200 weeks in the past, we might see 200-week moving average getting some momentum and might reach over here in January end or February, and that would decide as a top, which would be very similar to what happened in 2022. But that would not be then the actual all-time high or cycle high, top of the cycle. So this model, in my understanding, is not valid anymore. There are other indicators, pi cycle and risk metric and whatnot, and basically all of them have failed to recognize the top in this cycle. So now what happens next? The model which I am following and which I discussed as well are basically this accumulation lines and distribution lines. There is one more catch to, or one more approach to this one, given that we heard that there will be quantitative easing happening soon. So now whenever the quantitative easing happens, we do see its effect after a few months. And if I have to look at not interest rate, but yeah, this one. So we did see quantitative easing starting last time. It was somewhere in September, and here in 2020 we know that we saw quite a huge rally in the crypto market, and this time frame from when it started quantitative easing, it took around 25 weeks. That's quite some time. So if I would have to say, all right, quantitative easing began in 2019, September 2019, and then the real rally started in February. So that's quite almost 5 months before you really start seeing some momentum in the asset class, like crypto, Bitcoin, or your altcoins or whatever. And up until that time, for next 5 to 6 months, basically the Bitcoin price kept going down. Even if you do not consider Corona crash and you say, all right, that's once in a lifetime event, the price, one can just think that price would have gone up and basically here. So we can just ignore this part of the price action, but still the rally began only after this point, after July 27th, or the parabolic rally began only in October 2020. So here, this is the start of the parabolic rally. let's make it this one, and here is when, I think, September. This was when quantitative easing was declared or began. If I go back to the quantitative easing chart, it's this one, and that is September 2019. This one is September 2019. The real parabolic rally happened after 1 year. So quantitative easing was declared somewhere around October, November, and if the same thing happens, that the Bitcoin price is going to make some significant move, just like over here, some significant move where in October it made quite a few weeks of uptrend, or over here where there was some pullback but there was a lot of strength. What we see here is that it's almost a time of 1 year. So if you ignore the crash, if you assume that the price would have stayed in this range, let's say, and then the parabolic rally happens from this point onwards, it is very similar to the situation we are currently facing. That is, quantitative easing has begun, and for quantitative easing to have some impact on price action of assets like Bitcoin or Ethereum, Solana, Litecoin, if you are holding Litecoin, it will take some time, and that some time can be 3 months to 6 months. And my hypothesis here would be that we have two arguments supporting it. First, the Fourier cycle, which is basically this accumulation and distribution phases of Bitcoin, and the second is quantitative easing. So even if quantitative easing has begun, it would be very difficult for Bitcoin to get out of this range. So right now Bitcoin has not formed any range. So how do we know what was the range here, right? Because there is nothing which tells us what would be the range. And for that I would take some concepts of support and resistance, or fair value gap, or order blocks, whichever is your favorite tool for technical analysis. To me, order block, they sound quite well to break down the chart. Of course, you can use support and resistance if you want to. And the way I see it is that we do have some bullish order blocks which are formed here. A bullish order block is when you have a rally just after, followed by a bear candle, and in this case this would be my bullish order block. And the fair value gap is usually the candles where you don't have any price action. So here literally there is no price action happening. So there were no pullbacks which happened here, and whoever went long at this point, their price action was not touched. And usually market makers, from whatever I have observed, they tend to bring the price towards the price block where it has not seen before or reached again. For example, in this case, I would have assumed that the price would at least retrace back to this break of structure at this point. But again, we do not know exactly how it turns out to be, so it's good to already take some risk at the start, at the mid, and at the low of the fair value gap. Now in this case, here we see a fair value gap. Sometimes price just reaches to the top level of the fair value gap, and sometimes if the momentum is quite strong in the bearish direction, then it would wick down to the order block here. All right, where did my brush go? Here it is. Good. It will maybe make a wick down over here and then go forward. Now, I'm not trying to imply in any way that Bitcoin would go to 30,000. I mean, it could happen. It's nothing is sure. No one can be sure if it will go down or not to 30,000. But let's say if there is a crash in S&P, then that crash will impact Bitcoin's price value as well, and that would be basically a drop from here. Let's say if it goes down until this order block, that would be a drop of 67%, and from all-time high going all the way till here, that would be a drop of 77%, which in some sense is in line with the previous cycle, where here it dropped to 77%. Then in this cycle of year 2017, it dropped by 83%, and over here it dropped by 86%. So it's not unlikely, the probability is still there that Bitcoin could drop by 77%, 76%. Let's say if there are diminishing returns, then the drawdown is also diminishing because market is getting more stable, less volatile. So if it is not 76%, even if it is 75%, or if you want to be more optimistic, if it is 65%, it still could go to 42,000. And there is, based on the same logic of order blocks, there is still an order block here from this particular candle. And there are a bit more theory about order blocks where the wick can be also considered as the bullish order block, because the wick was basically indicating a bearish momentum over here, a strength of bearishness, but then the bullish momentum won against the bearish aspect of the price. So this can be also considered as a bullish order block. So price can still come down to 41,000, and coming down to 41,000 is almost 50% drawdown from this point. And again, there is also a fair value gap from this point until here, which was tested at this point. However, there still remains quite some price action to be created in this order block. The theory of order block is quite interesting to analyze the chart, because otherwise what happens is, if you have no lines and if you're just looking at pure price action, it gets quite difficult to break down and see what could be the next likely thing to happen in price, and what would be the right time to take the risk and how much to take the risk. But as soon as I have this accumulation lines and distribution lines and halving lines, then I can compare different parts of the cycle and make a thesis, have a model which would be like, all right, after October 20th of 2025, it's a post-halving year, then get out of the asset, in this case Bitcoin. And as soon as the price has crossed September of 2026, so basically next year October, it's time to already start taking risk or start doing DCA. That's one more point which I about the DCA. I see it so often on crypto Twitter and also on various YouTube channels which I follow, and some of them I used to follow, that every time there is a drop in price 5 to 10%, the whole social media goes crazy that, oh, we should continue doing DCA. However, it is not very profitable to do DCA when the price is going downwards. Why would you do that? If you are going to continuously DCA in a downwards market, and your thesis is that you want to have the price go up, then no matter what your average is, no matter where you DCA, your average is always going to be above the price, the current price. So every time you DCA, you are still in the loss. In my understanding, the best way to do DCA is, once you have defined, all right, in my opinion, the bottom is in, I already see that accumulation period has happened, I would start DCAing when the price is going in the direction of the trend which I wish to happen. So if I'm bullish on Bitcoin, my DCA would be in the direction of the trend, rather than, so this would be the direction of Bitcoin. That's when I would be doing DCA. And this thing, I would basically avoid it completely. It is better to DCA in the trend, during the trend, in the direction of the trend, where you want the price to go. If you're going to long Bitcoin, then have a DCA in the long direction. If you're going to short Bitcoin, DCA in the short direction. Yeah, I think that would be all for this video. And if you like the content, then do hit the subscribe button, and if you like it a lot, then share it with your friends, and I will see you in the next one. Bye bye.